Good morning, traders. It is Friday, June the 6th. Going to fly through the charts this morning. Try and keep the video a little bit shorter. Looking at the SP 500, you can see it's been stair-stepping its way up in a slow and steady grind. It's been trading sideways, has a run up, consolidates, another run up. Yesterday we had this bull flag here form. If we just throw the Fibonacci extension, I pointed out yesterday morning that with the pre-market trading, it looked as though we had about a 1935 upside target. Of course, we almost hit that a few minutes after the video was posted with some pre-market news. And then we saw some pretty wild price swings, and of course we ended up blowing past that target to the upside. But overall, it continues to grind and move its way up. Now, yesterday's big move, it's a high volume move. We're starting to see a little bit of an overbought market here. We had the market close at about 3-to-1 ratio for buyers, meaning there's 3 buyers to every 1 seller. When everybody's running to the same door, usually once that momentum stalls out, we see a very sharp pullback negating pretty much most of this move. So yesterday we saw the equities move higher, and we also saw bonds move higher. And that goes to show that investors are fearing that there's going to be more of a pullback. As the higher stocks go, the more of a chance we're going to see the stocks pull back. So money's been slowly rotating into bonds also yesterday, and we got positioned into the bond fund. Now, if we just take a quick look at the chart of bonds here, let me just pull up the EDV. We have a position in this from a long time ago. We ended up seeing a pullback all the way down to the 50-day moving average, which is this blue line here, and it looks as though it started to put in a bit of a bounce. Hopefully we'll see it continue to bounce higher. Now you got to remember, when in most trends you'll get a steady trend that moves. This is a 20-day moving average, this pink line here. Eventually near the end you start to see price actually move even further and quicker. Usually it's the last little bit of a move is when you get some of the sharpest moves. Things do become more volatile and tougher to trade, but overall sometimes you get some of the biggest moves right near the end. So with any luck we'll see volatility pick up, and we could see this really ratchet and spike up, and it could easily reverse back down after that. But I think we're setting up here for a nice bounce in the bond fund. Now taking a quick look at a couple other indexes here. If we take a look at let's just pull up the NASDAQ, QQQ. You can see here yesterday we were testing these previous highs. It's been consolidating. We got a nice big pop in the NASDAQ. In the IWM, we also saw a big move into these more risky stocks. We're seeing we had a pop here, a pullback, and a big move up in the NASDAQ and Russell 2000 yesterday, showing money is moving back into some risk-on assets. Now, if we do a simple Fibonacci extension, you take this low, you take this high, and you take this low here. It gives us an upside target around 1764, which happens to be in this high volume, these blue volume by price bars, right in the middle of these this previous pivot high and this consolidation. Now, you could argue where you want to draw that line. Shorter side target would be actually right over here. This is where the last level would be. We had price pop up and then pull back, and that's where it started really the last rally. So 1659, which puts us right at the bottom level of this high volume resistance. So it's likely going to find resistance between the 1650 area and the 1770 area. So there's room for this to continue to move up another couple percent, and we could see the market slowly grind its way up. I think we could see the NASDAQ and the Russell 2000 pop quickly, but I think we're going to see the large cap stocks start to stall out and become a little more choppy. And I think bonds are going to hold up here, and once the market does start to roll over, we could see our bond fund actually really take off to the upside. Taking a quick look at gold, GLD, if we look at the GLD fund, pointed out yesterday it was starting to look a little bit overdone to the downside. Looks as though it's about ready for a bounce. Yesterday we started to get a bounce. We're going to more or less is trading flat this morning, but the trends continue to be down for precious metals, and I do feel as though we're going to get a little bit of a bounce. I think we could come back up and test these moving averages, and of course this breakdown zone, possibly fade all the way up to this big gap fill here, and then from there it could be a shorting opportunity as it continues to be in a downtrend. Now if we look at the SLV, SLV, same thing. SLV had a nice big pop yesterday. Again, it's going to have some resistance once it comes into this high volume level, this consolidation zone. I think we're going to see precious metals kind of drift higher. Now, if we look at the GDX, gold miners had a nice up day yesterday, showing some good relative strength. But again, they're forming a bear flag, and I pointed this out, I think, last week that I think we could see, or earlier this week, we could see this fade all the way up and come back up here, and it would likely be a possible shorting opportunity. Now, if we look at the GDXJ, which are the juniors, same thing. They're actually already getting up there. They're tagging the 20-day moving average and coming into this high volume support zone. You can see there's lots of volume traded in this range, so it likely stall out up here. And if we look at the SIL, which is the silver miners, again, they're working their way up also. So we still have high volume selling, and this fade up here is we're just starting to see this kind of drift back up. And I think there's a couple more days we could see the market kind of drift higher, even the equities market and precious metals. And then I think we could see it roll over and pull back together. Now, taking a quick look at energies. Here is the natural gas chart. Natural gas is drifting up to the upper end of this range. You can see we had the big volatility early this winter, but overall it's drifting up to the upper end of the range. Not really looking to get involved in natural gas. Don't really see any tradable setups. Looking at crude oil, same thing. We've had a nice run. It's starting to fade back down. Let's just zoom out a little bit. It looks as though it's forming a little bit of a bull flag. Had a little bit of volatility there. We made a new high. We broke this previous high, but then it pushed all the way down, made a new low, negating this previous high. So it still continues to be in a short term, a little bit of a downtrend. It is starting to consolidate back down, but overall I think there's room for it to continue to fall down to around this $100 level. It could chop its way, grind its way out down to this level. If it does get to that level, it could actually be a buying opportunity for it to come back up to the upper end of this range and could ping pong around. Eventually, when it breaks out of this pattern, there could be a significant move, and hopefully we'll get a setup. We could possibly even get in a little early before a breakout, as long as the chart is indicating that a breakout looks imminent. And a breakout to the upside or the downside, I think we'll have a substantial percentage-based move. Looking at the US dollar, this is the UUP ETF. This mimics the US dollar index. Of course, yesterday I posted a report there about bonds, and more or less not bonds, the euro dollar. Of course, we had the ECB lower rates again yesterday, which spiked the euro up and, of course, put a short-term top in the dollar. I do feel as though we're going to see the dollar pull back, probably down to this 21.30 range. I think we're going to see it fade down here for a few days, and then eventually I think it could find support and continue to rally. So overall, I do think we're going to see a little bit of short-term weakness here in the dollar. We're going to see some short-term strength in the euro, and the weakness in the dollar is going to obviously help equities a little bit rise, which is what we expect, a couple more days of rising. And same with precious metals. We expect them to rise a little bit higher. Eventually, I think we're going to see the dollar come down and find support, and I think we could see it actually have a strong bounce and rally off here. And if that's the case, we're going to see precious metals and equities start to pull back. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.